What's up, world? This is Serge W.D. Haiti, or Serge W.D. Haiti, CPA PLLC, where life is good and living is better, and I'm the dreaded CPA. And today I wanted to, drop off this video for anyone that has a mortgage and had a situation where they pretty much weren't able to keep up with the mortgage and they end up losing it. So in this video, I'm gonna be talking about mortgage forgiveness and the tax consequences and the ability to have those taxes forgiven. So the Internal Revenue Code, Section 61A12 requires that you report your debt forgiveness as income on your 1040. However, in Section 108, it provides an exception to that rule on the reporting of the debt forgiveness for individuals that had their debts forgiven based on the financial meltdown that happened in the past and even in today on modifications, short-term modifications, foreclosures, deed in lieu of foreclosures, and short sales. So those are the different situations where if you run into these situations where you lose the ability to pay for your mortgages and you end up having your debt forgiven, you're supposed to report it as income. But the law, and back in 2008 or 2007, they passed a law called the Mortgage Cancellation Tax Relief Act, and that act allowed individuals during the financial crisis to help those individuals with their debt forgiveness. Now, this law was improved back in 2021 with the Consolidations Appropriations Act, and this allowed individuals with qualified principal residence indebtedness to be able to have those debts forgiven. And this exception is going to be available up until January 1st, 2026. So if you're able to get these debt forgiven, you are able, or get the debt forgiven and also have the agreement in writing before 2026, January 1st, you are able to write off the debt, and that agreement has to be entered before that date, and it doesn't matter even if you have the debt entered or the debt forgiven after that date, it will still stand. And the amount of the exclusion is for $750,000 if you're married filing jointly. Now, if you're a single individual, you got to cut that in half, which will be $375,000. And this forgiveness is very specific to your main principal home and debt that was used to either purchase the home or do some major improvements on your home. So you can't have, a summer home and use that debt to forgive on that. This forgiveness doesn't apply to that. So if you are running into these situations, you can give my office a call and we can work out, a tax planning strategy for you to have these debts forgiven, especially in a time like this right now where everyone is going through some financial pain. Even during this pandemic, this could help out a lot of people. So that's the reason why I brought this video to you all. So I'm just dropping this video for you all, and this is for anyone that's running into a financial hardship and you end up having your debts forgiven on on your main principal home, specifically for a mortgage on your main principal home, and you are able to get those debts forgiven. And I'm the dreaded CPA of Serge W.D. Haiti, CPA PLLC, where life is good and living is better. Peace.